Salute, folks. It's your boy, the Insurance Junkie, your fiduciary fella, the all-star advisor of Alonzo Hall, and I've returned today to Weapon Tap on your head with another ADH wealth solution. Before I go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule a one-on-one appointment with a licensed financial professional, the links are in the description.
In his math, if you buy a $500,000 home, you have lost $15 million in potential net worth because you followed his math. Now again, there's nothing wrong with owning a home, nothing. But if the reason why you're doubling and tripling and quadrupling payments is so that you can enjoy being debt-free, you are paying off a tax postponement, and you are building, or you're killing the tax deduction, and you're creating a tax postponement. And again, David, I don't know how the producer let him go through, unless Ramsey was in one of those moods where I'm going to try and tackle somebody in the hallway.
Yeah, well, we'll see. Anyway, you asked about the slide thing. I'll share my screen real quick, because what that was is from the American College. It's how universal life works. And so it's your bucket analogy, but with the increasing mortality costs here in the corner. But it's from the American College, so there's no bias in it. This is how it works. So
remember, the strategy we use is overfunding, not target. So I wouldn't even show this, because even an overfunded IUL, once the cash value reaches a certain percentage of the death benefit, they both must start rising. There will always be a cost of mortality. So
it's just warning that target doesn't guarantee against policy lapse. Target's the minimum, assuming that the current rate of return works to make the policy last to age 100 or 121 or whatever it is. So
isn't it interesting though, David, that during the early 2000s, there was no lapse guarantee UL based on target. I don't know if you remember that or not, but if you paid the target, companies that would produce the target, because a target premium is different per company, right? It's not $50 per thousand. It's based on their actuarial assumption. So they were doing, here's the target, and if you pay this, we guarantee the death benefit for life. And then interest rates continued to drop, and they went, ouch, and then they got rid of GMIB, guaranteed mortality. Today, I don't think anything is guaranteed except change. Tomorrow's value will be different than today. So Ron, can you talk? Or are you on your cell phone, or because I'd love to hear your take on how that radio, there you go. How did that radio show, or what his comments to the whole life guy, how'd that go?
So I've watched it in the past. I clicked the link real quick there just to see what it was, and it was something I've watched in the past. Look, when Dave Ramsey's talking about whole life, he is just full of half-truths, misleading lies, sometimes outright lies. And it's just the way that he spins the narrative. Like when he talks about, oh, well, why would you pay interest to borrow your own money? And it's like, you're not borrowing your own money, just like with the home equity line of credit. The bank is not taking money out of your savings account and loaning your own money to you. They're using the asset as collateral to secure this loan. Just like with the life insurance company, they're using your cash value as an asset to secure the loan. So that's just one of the many things where, he takes a half-truth and he spins it to make it sound really bad, but it's not true. That's the thing. So that's what he just does over and over and over.
Well, I had heard that when he was asked, why are you so anti-whole life when you own it? And his comment was, it was pretty honest. He said, look, my average radio listener doesn't need to be buying whole life. They're living paycheck to paycheck with credit cards. They shouldn't own whole life. And quite frankly, I agree with him. They shouldn't be. If you're broke, you shouldn't be buying whole life. You should be buying crap loads of term and get your shit in order, period. And once you got that in order, let's talk about building wealth. So the message, I don't disagree with. The reasoning behind the message is very flawed, very flawed. But again, there's nothing wrong with buying term. We sell crap loads of it. And there's nothing wrong with owning your home. But when you understand how wealth works, not product, when you understand how the concept of wealth is treated, probably going to change what you're doing. At least you should look at changes, because if you follow typical financial advice, you're going to get hurt financially. And as a fiduciary, I'm not required by law to even care about being hurt. I just have to tell you how much I'm going to get paid and if I have a conflict of interest, and I have satisfied the fiduciary rules. Oh, you think I have to care about what your taxes are? No, I don't. I really don't. My broker-dealer forbid me to talk about it, so see ya. Well, now I no longer have a broker-dealer, and now I can talk about it, which is why I don't think I'll ever go back to having a registered rep degree.
Well, and isn't that consistent with basically just wanting to know what you're offering? I mean, when you're offering variable products, by their very nature, they're going to change. And whenever you want to be able to offer somebody guarantees, that kind of knocks out the whole securities license, doesn't it?
Well, when you look at how life insurance is spent and the effect it has on your tax return, you'd have to earn over 20% a year to equal the rate of return equivalent with safe withdrawal rates and taxation and Social Security and Medicare. If you take all of the things into consideration, not just rate of return, but the effect, everything is caused by the effect. And if you look at the effect and the effect it will have, you're probably not going to do what you're doing. All right, we got about 4 minutes left. What do you want to talk about? Alonzo, what's on your mind? Lost 10%. Is that good? Is that the 10% you're referring to? Oh, you meant positive 10%. Oh, I know it changed 10. I just didn't know which direction. Yeah. Buy term and invest the difference. I remember Brian Bloom's presentation, buy whole life and invest the difference. Again, pay your house off early to satisfy the bank. Kill the tax deduction and build the tax postponement. Why? Because that's what the financial advisor wants you to do. Look, if I could control 5 million of your money and get a fee on 5 million, I'd rather do that than show you how to spend more efficiently 3 million. Because this is all about me. You know, it's about my retirement, not yours. I just need to find 3 people with as much money as you have, and I can retire instantly on the same amount of withdrawal that you're expected to take. And by the way, I can do that in 30 days, and you took 50 years. And I'm not required by law to tell you that. Life sucks. It's good for me though. Give me your money. All of it. I'm good. What I despise about our industry is that we're very good at teaching people how to save. We're pathetic at teaching people how to spend it. And that to me is the real crux of this deal, because when you look back at 2011, when the baby boom was beginning to spend their money, called Social Security and retirement, very few advisors have taken the role on what can I do to help you spend it efficiently rather than just merely save it inefficiently. Look at all the taxes I'm saving. I'm sorry, that's an incorrect statement. Look at all the taxes I'm postponing. And you know, when you think about it, Shalom, when you look at the debt we have, and when you have an adult conversation with somebody and you say, what do you think what do you think income tax rates are going to have to do in the future? And that is go up. Then just remind them, today you're in the lowest tax bracket of forever. Not just today, for the rest of your life. And you're thinking you're going to win by postponing. Good luck. But I do hold the keys to your financial freedom. And the real question is, do you care that I could help you? And if you are, I'd love to talk to you. And if you don't care, I can't help you. Okay? Let's leave it with that. Jane, you again, another episode of you being extremely quiet. What have you learned on today's episode of Do We Give a Crap?
Well, you've reminded me about the buckets, or the bucket for IUL. I'm glad you went over that again, so thank you. I was just here to see what this was all about, and I'm really glad I accidentally showed up, so thank you.
Well, these are all the people that are following me. We've got Alonzo, and we've got Ron and Shalom. Unfortunately, you guys have heard most of the crap that comes out of my mouth, and you still want to come back. That's amazing. That's amazing. Zale, as always, thanks for popping in. Appreciate it. Guys, have a great one. We'll see you next month, and we'll do the same thing. Do me a favor, come back with some issues you'd like me to talk about. You want to hear a rant? Or better yet, subscribe to the newsletter. What I do in the newsletter is I take a current event. I tell you what the client should know about it, what you should know about it. I rant about how it affects the financial services arena. And then I give you power phrases, conversation starters, and how you can become a person of interest. So hope you can subscribe. And I'm interested in material you want me to write about, shoot me an email or get a hold of me at tom@thebreakawayleague.com.
Thanks, Tom.
Have a great week, everybody. We'll see you later.
Tom. Good seeing you. Bye-bye.
Same here.
Hey folks, this last video was sponsored by my company, where we help people like you to reach their financial goals. We do this through a simple conversation where we help to identify and then protect your lifestyle, and then we implement a plan. The process starts at about an hour. So, if you want more information, or you want to schedule a consult, contact me via the information in the description box, and let's talk and see if we're actually a great fit for each other. And remember, ladies and gentlemen, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Thank you, and enjoy life.